This shipping name continues to deliver. I'm Jill Malandrino with the Street's Options Profits.
And I'm Scott Redler, Chief Strategic Officer of T3Live.com.
Scott, ever since we've been doing video work together, our biggest theme has always been deliver solid quarter, deliver solid guidance, and your company gets rewarded. That's exactly what FedEx did when they reported last week. Beat the quarter. They continue to expect to meet guidance for their fiscal year, and that's what we like to see, relative performers in this flat, unconstructive, choppy market.
Yeah, this is true. And there will be a time when the Street actually looks at companies that are hitting their estimates, that are going with their guidance, and not just trading at the correlation of one when everything gets thrown out the window. And basically, if you look at the chart here, FedEx, you'll see that's somewhat what happened. Okay, they came out with decent numbers. It tried to break above this little channel here. And then yesterday, the market got hit, so everyone said, you know what? Why is FedEx going to break out now when this market's under pressure? So you had a pretty much short-term wide range bar. So if you were a short-term trader, you probably got out of the way. But overall, it's holding up okay. It's above the moving averages. It's well above the bottom of support where a lot of things are breaking through support. So I think with time, this thing stays in this channel. And at some point next year, if the rally gets back on, this will trade above 85, and you'll have a clean move back to higher resistance in the 90s. But right now, short-term, watch the moving average right here around 80, and then the lower end of this overall channel.
Well, you know what it is too, Scott? Like, unless you've been living under a rock, it's no surprise that online retailers are seeing a lot of traffic, which is obviously great for a name like FedEx, even UPS, but it happens to like FedEx even better. I think the only overhang the stock might have, like everything else that's trading in a range, is you have the choppiness because of the oil prices that could potentially affect the bottom line for the stock. But I don't think it's going to be anything.
I don't think it's a game changer.
Right.
And you know what? If oil starts going through the roof, you know what that means? That means the economy is getting better, and that means that demand's going up anyway. The last thing you actually want to see is deflation, where oil starts breaking below 95, 88. Then all of a sudden, yeah, the margins might get better, but no one's ordering anything. So I think at this point, they're in a decent sweet spot where they're performing well. We just need the market to start coming into play as well. So I think this is a micro tier 1. Then at some point, traders could look at it when the market starts acting better, and so momentum comes back to the name.
Well, we're going to have Skip give us our option strategy, but one way that you could potentially play this is with a vertical call spread, a little bit longer dated. You've got your controlled risk scenario. You capped it with the reward because it is a hedged play, but that is a way that you could take a look at this name a little bit further out into, let's say, March or April.
Yeah, instead of just trading it back and forth like I have to do on a daily basis.
Thank you, Scott.
My pleasure.